What's up guys, Eric here from MajorLeagueTrading.com, and in this video I want to break down a trade from Friday. It's actually two trades, one in the QQQ and then one in Tesla. I traded shares in one, I traded options in the other, but the basic concept of the trade or the strategy behind the trade was from one particular strategy that I like to call the divergence, and then drilling down from there after that happened in order to find my entry. So I want to walk through step by step all the way through each of these trades, even from the morning, and they didn't end up setting up until 10 o'clock. So I did nothing for the first 30 minutes of the day, but just watch and wait for a setup that I liked. And when that finally came along, I was able to execute upon it. I dropped it in the Discord as well, and it worked out really nicely. Could have held for much more on that, but I'll talk about that as well and some other things there. So let's dive into this, and to kick it off first, I want to start with looking over the morning write-up. So this is my daily plan that I send out each and every day, and this is really what kind of sets my tone for each and every day. So it's Sunday at 6:30. I'm actually getting ready to do my kind of Sunday prep for the markets, but I wanted to put this video together more so because one of the room members asked me, and hopefully you guys find some valuable information in it as well. But with this, Fridays are typically not days where I like to press anything. Most Fridays I don't really do too much. I'll scale back size if I do anything, which is what I did here as well. So when I wrote the morning write-up here, markets were taking a bit of a breather. We were getting a bit of a gap down on Friday morning. And I wrote in here, I'd been sitting here looking at charts for the past hour, and I still have no idea whether I want to trade this or not. And I went on to say a couple other things here. Basically, we're also relatively strong overall, so I don't want to short anything. It's hard to be buying the gap down here after the 3 days to the upside. But if I am going to look at anything, I would watch for Tesla longs on a hold of 722.06s or a potential short in UPST. Now, when I write these up, the one thing that isn't always going to be in here, but is still very much a standard play, is the divergence play for me. That's a steadfast every day. I can play those in the direction of the trend if they set up. I don't have to play them, but I'm allowed to play them. So that's a very distinct point, right? Is there's certain setups where every time they set up, those are trades that you should take. And then there's discretionary trades that you have, or at least that I have, like the divergence, where I don't necessarily always take it, but I'm permitted to. It's part of my plan. I'm allowed to. I just don't have to write it every single day. So with that being said, let's take a look first here at Tesla, and we'll see this 722.06 level. I also had the 38.90.75 level in the S&Ps. You can see top left chart is a 5-minute, and the 2-minute over here, 15-minute hour daily. And essentially you can see we're getting a bit of a gap down here, about 13 points or so, 3900s down to 3887s in the S&Ps. And what I was talking about is, the fact that we could potentially fail this 38.90.75s. Most likely we're not going to. We're going to try and go sideways some today after 3 days to the upside. But I wanted to be patient and see what was going to take place in there. And then when you take a look at Tesla here, here's that 722.06 level. You can see lows of the day ended up being 723.48. But something else to note in here that I had mentally noted as well, in the pre-market session, we traded down to 722.19. So we were 13 cents away from trading that level in Tesla in the morning in the pre-market session, and we didn't get it here in the first part of the day. Now, if and when Tesla can hold that level, which it proved it was going to in the pre-market, didn't quite get it here in regular trading hours, but once it goes into an uptrend, from there, even though it didn't trade the level in regular trading hours, traded it in pre-market, I'm able to step in and get long Tesla, which is in fact what I did. And I got long right in through here, 733s. Now, the reason and the why behind getting long there and talking about all of these things is exactly right here. So, two things. Talking about NQ tested open, 2-minute sell here, that fails and we can work back into the gap on the day, otherwise lower. QQQ 290 calls back above the open here. This was at 10:03. Then I went ahead and put this into the Discord there. Now, what I saw in the QQQ here, I'm going to go to this just because I traded this as opposed to the NASDAQ futures. This is what I was talking about, is the 2-minute sell rallying up, setting up, and then failing back over the open right inside here. So if you've taken the options course or you followed me for long enough, then you know what this buy and sell setups are. And essentially this is what I was talking about right here, is the potential for this 2-minute sell to set up. It did in fact trigger, and then that to fail, which it did. The question is, why did I anticipate, or why did I think that this 2-minute sell setup right here would fail? And again, that's because of the divergence strategy. Now, bear with me, and you may have to rewatch this a couple times on this, but what I'm looking at here with the divergence strategy is I want to see one of the indices doing something that the others are not. So for example, when I put my cursor right here at 10 o'clock, I see, okay, S&Ps made new lows on the day in that 5-minute bar. Russell made new lows on that 5-minute bar. Those are new lows for the day. Dow, down here in the bottom right, made new lows on the day on that 5-minute bar. Meanwhile, the NASDAQ did not. This low is 11,984 quarter. This low is 11,978 quarter. So even though it's just 6 points, right? Only 6 points that the S&P, or sorry, that the NASDAQ is not making new lows, while the S&Ps ticked. This is a low of 3873.50. This is a low of 3871.50 by 2 points. So S&Ps made new lows by 2 points. NASDAQ held their low by 6 points. This constitutes a divergence for me. And as you can see, there's green arrows here across the board on the divergence indicator for the Russell, for the Dow, for the S&Ps, and then no divergence here on the NASDAQ. Why? Because it didn't get the new low, and other markets picked up the divergence for us. And this was what I was looking at to say, okay, this is most likely going to end up being the low for the day. How can we find a low risk, type of entry to this? And for that, I went over here to the 2-minute chart and found this failure of a 2-minute sell setup right here. Now, all of that said a lot of things right there. What I want to do is actually pull over my options chain here. And again, this is the 2-minute chart. And you'll see this is the same, if that'll work, this is that same 2-minute bar that I mentioned going, hey, we're likely going to set the 2-minute sell setup. A failure of that with this divergence gives us a move back into the gap on the day. That's what I wrote, right? That fails. NQ tested open 2-minute sell here. That fails, and we can work back into the gap on the day. The reason being, we have that divergence. Now, we take an entry here. We scale out on the break of this high, and then we scale out more up in here. This continues to run to $4.86. Now, I talked about this where I left potentially $2+ on the table. I said, hey, we could work back into the gap. That puts us back up into like $3.50. So I left $1+ on the table. Again, it was Friday. It was a relatively small position for me, 10 contracts here, $1,300 worth of capital in here. And I had decent risk-reward ratio already booked on this trade. And at the same time, we had all of the other markets, which I can show this as well for that exit. We had all of the other markets at the time of those exits pushing up into their opening print on the day. So now NASDAQ had some relative strength there on the day. It proved that it didn't get the new low, all of these things. But notice on this exit here, which is at 1014, so it's going to be in the 1010 bar right here. Notice the type of markets that we're seeing here is the Russell isn't quite back into opening print. S&Ps are just testing back into opening print. And the Dow here at 1010 is actually nowhere near opening print, which would be up in here. It didn't get it for another 10 minutes or so. So that was the reason for, kind of the scalp on this trade. And the other part of that is I played this twofold. So I played it with Tesla as well, which I know I'm kind of bouncing around a bit here, so hopefully you can keep up with it or rewatch the video. But these are all the things that I'm like thinking through and going through my mind as I'm watching this in real time. Hindsight's always going to be 20/20. It's like, oh, why did you sell out at $1.93 when you could have got $3.93? Well, I have reasons as to why I did it. And I don't necessarily care if I ended up leaving $2 on the table. It was still a good trade. It was a valid trade. And I followed all of the mechanics and everything accordingly. Could I have put a trail stop in? Yes. Was it Friday? Yes. Were they 0 days to expiration options and theta on any kind of sideways or minor pullback that I normally could hold, on like a Tuesday, Wednesday, Thursday type situation? I probably would have got kicked out of them just because it's Friday and there's 0 days to expiration. So that theta is going to start to kick in really, really quickly. Now, the other way in which I played this is in Tesla here. So you can see this limit up here is just part of this butterfly position that I have on. You can see it's up about $1,000 here on the butterfly. But this trade right here ended up being good for about $500. I think it was 400 and some change on the day on Friday. And here's what I ended up setting up with this. So I anticipated an early entry here, just 25 shares, 733.82 on this bar, right? Which you can see is the break over the high of this bar, 733.39s. I got filled at 82s, 733.82s. That was an early anticipation into a potential divergence or something occurring. And it was also the first pullback after Tesla had proven that it had the trend. So it was valid for an early entry. Again, only 25 shares. I'm trading this super small. Again, it's Friday. Next up, I take my next entry when we get the divergence, when I take the QQQ position as well, and that position gets an average price of 733.12 right in this bar. Now again, this is very much a valid setup. This is a nice pullback in the uptrend. We rally, we pull back, and now we're holding a potential anticipated higher low on the 2-minute chart with good daily, with a divergence in the market, all of these other things, right? And this now allows me to set my stop basically right under 730s. So you can see this low on this bar is 730.12, and this low down here is 730 on the dot. So even though it's 12 cents higher than this low, it still constitutes as a higher low for us, and valid entries can be taken with this bar, which is a $3.07 range bar. The high is 733.19s, the low being 730.12s. So I now have 50 shares of Tesla with roughly a $3 stop on this trade. So I'm risking $150 here. This is a very, very small trade. Again, it's Friday. Like the dollar amounts, the dollar amounts don't necessarily matter, right? But it is Friday. I'm trading a smaller size. I don't want to go take a full size $5,000 loss on a position if I'm wrong on a Friday, right? Tuesday, Wednesday, Thursdays, I'm fine with taking full size positions if they're warranted, right? On a Friday, I'm not. Again, what's more important here is the mechanics of the trade. So just know now I have 50 shares with a $3 stop. I have roughly $150 worth of risk in this trade. And from 733s to 743s gives me a basically $10 target, right? We're a penny here, a penny there. Not a big deal. There's a spread on Tesla. It is what it is. I'm doing quick math in the moment, realizing, okay, there's about a 3R risk to reward ratio on this trade to targets. So as we start to move here, I went ahead and started layering orders over this 741.55s. You can see I got 741.55s on a couple exits there. And then I got the rest right up here into 742.99. Now, that gives me my first 2 exits on this position. I'm out of 80% of the position. I have 10 shares left. I end up taking those 10 shares up here at 753.69 on this bar. And the reason I ended up taking that exit and not holding up into my 763.65 target, which ends up getting hit, is because at that moment in time, when we finally got the rally out of the rest of the markets, right, this was pushing new highs on the S&Ps, new highs on the Russell, new highs on the NASDAQ, and new highs on the Dow. Good, strong, nice move on a 5-minute chart across the board in all of these. And again, this is pushing right up into just shy, basically, of this gap fill on the day for NASDAQ, which again, if you remember, is what I wrote here. That fails, and we can work back into the gap on the day, otherwise lower, meaning that 2-minute sell setup fails. So we've gotten the combination of all of the things that I wanted to take place here across the board on these trades, and ultimately, what ends up happening here is I make roughly, I think it was just shy of $500 here on Tesla with a $150 risk on the position. And then I made, I think, just shy of $500 here on the QQQ position here with roughly a $200 stop loss on this position, right? So I ended up having, my risk was this bar right here. So my entry was 131s. My stop loss would be under 117s, so basically 115s, $160, $180 worth of risk. So I have just shy, given some spreads, given some slippage, of $300 worth of risk on the day, and these 2 positions end up working out for just about $1,000 in profits on the day. So that gives me a nice 3-to-1 risk to reward ratio, and this is how I managed those positions, found the positions, the strategy behind those positions, and all of those things. So anyways, with that being said, I'm going to go ahead and wrap this video up now. Hopefully you guys enjoyed this. Hopefully it gives a little bit more in-depth look into the divergence and the patience. And again, I didn't do anything for the first 30 minutes of the day, just waiting for these to set up. So anyways, hit the subscribe button, give me a thumbs up on this video, leave me a comment below if you enjoyed the content, and I'll catch you guys on the next video. Take care.